There's a massive shift brewing right now for Ethereum, and it all converges on December 3rd when the Fusaka Upgrade goes live. Plus, this is arriving at the exact moment when liquidity and macro policy are coming together to decide where Ethereum goes next. So let's get a handle on the bull case and start by looking at positioning and flows. And this year, traders have at times been extremely bearish on Ethereum, okay? With Ethereum showing some extreme net short positioning. Back in August, we had a situation in which shorts for Ethereum piled in super hard and then got wiped out when Jerome Powell signaled a dovish tone at the Fed, pushing prices higher, in fact, pushing ETH up to new all-time highs. Another dynamic, ETH, of course, declined after that. Another dynamic, though, has also been playing out with retail investor holdings going down, while at the exact same time, large institutional investors have been doing the opposite and accumulating massive amounts of Ethereum. As for who these big spending whales are, well, the bulk of the buying is likely coming from a few major players with the deepest pockets of all Ethereum treasury companies, particularly Bitmine by Tom Lee. It's reported that public companies acquired a huge 95% of their collective holdings during Q3 this year. But then again, Ethereum digital asset treasury companies are a relatively new phenomenon, so obviously most of that happened during the time that they started. But still, a massive amount of buying in a very short amount of time. We have SharpLink, we have ETHZilla, we have a few others, but really Tom Lee's Bitmain is the big winner so far. It's leading the charge, it now holds 3.4 million ETH, but SharpLink, Ether Machine, all these others, they've got a pretty decent amount too. ETH companies right now are holding 6.14 million ETH in total, which is over 5% of the total supply. Tom Lee alone, who has 2.5% of the supply right now, is going for 5% of the supply for his company. Also worth paying attention to here is that, as shown by Bravo's research, these ETH treasury firms' total liabilities across the top six fell from about 225 million to 190 million this year. Or in other words, they have got a lot of room left to lever up once again when capital gets cheaper. So it's here that we need to zoom out and try to look at some incoming macro tailwinds for Ethereum. So we saw the Fed cut rates by 25 basis points last month after a similar cut in September. And although it's not a sure thing, the market is expecting more cuts before year end as the labor market cools. And as for the knock-on effects, lower rates means cheaper capital, which in turn is more room for treasury firms to borrow and accumulate ETH. And remember that Bitmine is targeting 5% of the ETH supply. Also, more generally, when liquidity expands, risk assets rise. We've seen this in previous bull market rallies, and Ethereum in those situations did very well. Ethereum is the leading RWA, real-world asset chain, leading stablecoin chain, spot ETFs for ETH at an asset under management of approaching around $23 billion. And it's positioned as a key beneficiary for all the good things happening in the crypto space, even if the fees are still kind of whacked on layer one when things go bad, but that's a different story. So, well, we can never be certain what the Fed will do next. And there is some internal disagreement about what the Fed should do next with board members at the Fed. The immediate path of least resistance is towards easier money and higher asset prices. QT is ending, more rate cuts are coming. Plus, we now also have Trump announcing that $2,000 stimmy checks, aka tariff dividends, are set to be issued. That's massive if they do it. The government shutdown is finally ending, bringing confidence back to the markets. But now let's get on the technical side here, okay? Because Ethereum's next major catalyst is a technical catalyst, thus the title of the video and the December 3rd date. Exactly at the right moment too, because potentially this will fully align with all the macro tailwinds. And of course, we're talking here about the Fusaka Upgrade. Before we dive into all the details on that, guys, listen up. This deal right now from Femex is a no-brainer. Femex is one of the most secure exchanges in crypto, OG crypto exchange. I've literally been trading over there for years, and right now they're paying you handsomely just to sign up and start your account and start trading over there. Put in $5,000, you get $500 back. 10,000 bucks, you're getting $1,000 back. You go big with a $20,000 deposit, you're gonna get $1,600 cash money back. That's crazy. Plus, they have up to $20,000 in additional trading bonuses on top of that. The more you trade, more money they put back in your pocket. They're reliable, they're global, they're liquid, available to anyone, anywhere. That's you. You might need a VPN in some cases. This offer is limited time, so don't wait. Go check it out. Link down below. Claim the offer while it's still going. Ethereum's next move, the Fusaka Upgrade. This is the next big improvement. And it's not a minor tweak, with some people describing it as Ethereum's broadband moment when it switches from dial-up speed to high-speed internet. Specifically, here's what it actually changes for real users. First, fees on layer 2s like Base and Arbitrum are expected to drop by 30 to 60%. And they're already damn cheap to use. They're going to get dirt cheap to use. Finality times will also come down to around 5 to 10 seconds. Currently, they're around 15 to 30 seconds, so that's a major improvement. As rollups become more efficient, swaps get cheaper, gas volatility should fall by around 50%, which means fewer random fee spikes. And importantly, if you're using DeFi, there'll be smoother liquidity between markets. Also, lower rollup costs means private layer 2 deployments are more affordable with stable fees and improved reliability, all of which can give a boost to enterprise adoption for Ethereum. For developers, the upgrade will result in easier debugging, lighter clients for mobile-friendly apps, and a cheaper data layer. So, to sum up, Ethereum will feel smoother, cheaper, and faster, just like meth, baby. Anyway, fees will be more stabilized so you don't get crazy spikes in transaction costs like we have had at times of crisis previously. Look, Ethereum's still Ethereum, so it continues to be a properly decentralized, secure blockchain, probably the most reliably decentralized blockchain of them all right now with the best history. It's all coming on December 3rd. So with tailwinds at the macro level combined with a huge technical catalyst, let's also take a look at how price action is looking on the charts right now. The good news, the bullish structure is still intact. So if you zoom out to the higher time frames, then despite all the recent noise, all the doom and gloom on the timeline, ETH still looks healthy. You can see that it put in a 258% gain from the lows in April to hit just under $5,000 in August. A new all-time high. Barely a new all-time high, but a new all-time high. It then has retraced 39% of the move, which is pretty typical for ETH. That's a deep dip, but during the October 10th crypto crash, ETH retested and very convincingly held the 50-week simple moving average, which is a key level that supports a continuing bull market for the asset. By the way, quick reminder that for this kind of trade analysis, plus all of the latest on crypto, stocks, prediction markets, DGEM plays, trade setups, make sure to check out my free newsletter. Link right down below here. It's free. It's awesome. You can join our 180,000 plus weekly readers. Go check it out. Okay, so finally, what happens next for Ethereum? Well, to get an idea of that, we can look at what ETH did after the Pectra upgrade in May of this year. The price at the time was around $1,800 when the upgrade went live. Pessimism was rife on the timeline, rightfully so, I think, at the time. A month later, $2.5 thousand, and it carried on rallying to almost $5,000 in August. That upgrade lit a spark. From now looking forward then, here in Q4, we'd be looking at ETH to reclaim 4K, after which 5K is a strong psychological barrier at all-time highs. But if we can flip that resistance level into support, look at price discovery, a major leg higher to the 1.618 Fibonacci line, around $7,200, perhaps extending the move into 2026 if we leave the 4-year cycle behind. And while none of that is a certainty, the bullish catalysts are certainly lining up for Ethereum. The macro, the technical, the charts, it's all looking juicy. Thanks for watching.